Hi guys, and welcome back to the channel. Now welcome back to the beginner investing series, and we've been investing for around 8 months now as we started back in April. It's now December, so it's a good time to have a quick look at the portfolio before we enter the next year. If you're new here, this is a portfolio that I've built myself over on the InvestEngine platform using 6 different ETFs which combined give me global diversification. It's a simple long-term approach which will let the market and compound interest do the heavy lifting. Now over the last couple of months, things have been fairly flat within the markets, especially after the market rally in September and October. So a bit of consolidation and a bit of a market pullback is nothing too surprising. We've had a bit of uncertainty in the market, things around the Fed rate and also inflation data has led to the market pulling back slightly, but this isn't unusual. Here in the UK, it's also been quite a notable period as we've just had the autumn budget. Now while some changes affected savers, in particularly the cash ISA, investors have been left relatively unscathed on this occasion. I was personally a little bit nervous around them potentially reducing that stocks and shares ISA allowance, but that hasn't been the case, so we can continue as normal for now. In this video, I'll give a portfolio overview, a little insight as to the performance so far, my contributions, and also my thoughts going forward. So let's jump onto the app and have a look at those numbers. Okay, so jumping straight onto the app here, I'm going to do this video on the mobile app version because that's probably the version of this that you would end up using. So you can see here that I created what I call the Elevate All-World Distribution Fund. So this is those 6 ETFs, which I'll cover individually shortly. But above all else, you can see that everything is within a stocks ISA, which essentially means everything's protected from taxation, which is ideal here in the UK. So yeah, you can see the total balance is now £12,212. So if I click into that, this is where we can have a bit of an overview here. I did have a comment on one of my previous videos asking for what essentially the expense ratio is. So here, you can see that it's 0.05%. So that essentially means how much it costs me to operate this fund as a whole. And then also there you can see the yield. So that's the dividend income that I would expect from this fund. The yield, to be honest, month to month, it might vary a little bit. There's a lot of companies within this whole portfolio which may change their dividend setup and also dividend payments throughout the year. So you might see a slight fluctuation then. But yeah, 0.05% is incredibly low. A typical single all-world fund, which also matches the FTSE All-World Index, similar to what I've built here. The expense ratio on those are around 0.2%. So yeah, a lot higher than what we've been able to achieve here. So yeah, scrolling down, let's have a quick look here. So if I go here, we can see that my net contributions are £11,000. This is what I've added in since this April just gone. And we can see that we've gained essentially £1,212, which over this term has given us a rate of return of just under 27%, which is great. No dividends being paid this month, so all of the funds that I'm about to go through are dividend paying ETFs. You can of course go with accumulation funds, which essentially means that any dividends or your payments of the profits are automatically reinvested in the background to make things a bit easier. I personally prefer dividend paying funds. I generally reinvest all the dividends, but in 10 years time, for example, when those dividend payments are quite considerable and perhaps I want to start using that income for other means, then I have that option there. If they're all locked within accumulation versions of these funds, I wouldn't be able to do that. So personal preference really, I just like that flexibility. So if we have a quick look at the last month, since roughly our last update, we've actually dipped just shy of £100 really. It's not a big deal if you look at that and think, well, you know, that's quite risky, that's quite a bit of money. The market goes up and down, you know, day to day, month to month, you know, so it doesn't really concern me. All it means is that next time I do buy, which will be later this month, which I'll cover a little bit later in the video, means I'll be buying at a slight discount. But yeah, dollar cost averaging is the approach here. You can see generally that I add in. So that's what these different steps are. Each step that goes up, that's me essentially adding £1,000 a month. And every now and then I might chuck a bit of extra money in as and when, you know, my bank balance will allow it. The main goal though here is to add in £20,000 for the tax year, hence why I started in April, which was the start of the new tax year, and the aim before, I believe it's the 5th or 6th of April next year, is to max out that £20,000 allowance. So yeah, if I scroll down a little bit here, let's have a look at the total portfolio for what is essentially only 8 months of investing in this portfolio. Regular viewers will know I've got a couple others portfolios as well, but this is my sort of main focus for the time being, if you like. So the SPDR S&P 500 ETF, this first one here, that is essentially my US holdings, and you'll see that makes up around 67% of my overall fund, and that is currently trading at a 26% growth. You know, you can see there we've got 814 or just shy of £815 worth of gains, which is fantastic. Next is VERX, which is a Vanguard ETF. That's a developed Europe fund, excluding the UK. I've got another ETF which covers the UK, which I'll cover shortly, so I didn't want any overlap there. That's currently trading at a 22% growth, which is fantastic. We've then got another Vanguard ETF called VFEM, and that's trading slightly higher at a 24.4% growth rate, and that makes up around 9% of this overall fund. That's the emerging markets piece covered. Next, we've got the Amundi Prime ETF, and that makes up around 6% of this fund. That's trading at 25% growth since April, which again is fantastic. We've then finally got that FTSE 100. So this is the 100 largest companies in the UK that are listed on the London Stock Exchange, within the HSBC fund HUKX, and that's trading at a 23% growth. And then finally, we've got the Vanguard Developed Asia fund, excluding Japan, because obviously I've already got my Japan allocation sorted in that other ETF, and this only makes up 3% of the overall fund, but you can see it's trading at a whopping almost 36%, which is amazing. Just unfortunate that it only makes up 3% of this fund, but you know, going off the general weightings throughout the global market, this was always going to make up a relatively small portion of this portfolio. As time goes on, I may increase that portion, but for now, even though it's really high, if you're thinking, oh, well, why don't you put more of the proportions towards that ETF? And I'm not at that point yet where I feel I need to change it. I think we're just having a particularly good year in that particular area. So yeah, if I have a little look here at the bottom here, you can see topped up in November and topped up at the start of December. Doesn't matter whether the market's trading high or low, I still add in that regular £1,000 each month. If you're new to investing, it's a term called dollar cost averaging, and it's a really effective approach to investing. Takes a lot of the emotion out of investing as well, trying to time the market, which is incredibly hard to do. This is a really long-term approach, so whether I'm buying at a 0.5% higher one day or 0.5% lower the next, you know, these slight dips and you know, within the portfolio in the long term, in 10, 15, 20 years, I'm not even going to notice them. So not too concerned with that. If I click within one of these, you know, funds, it will then give us the individual data and all of the data to do with that one specific ETF. But yeah, you can see here, it also gives me a snapshot there. So you can see my value of that particular ETF is just over £8,000 there. In terms of actual shares, the great thing with the InvestEngine platform, it lets you invest in fractional shares. So I've got just over 16 shares within this ETF. The average purchase price of £460 per share of this ETF. And if we scroll back up, it's currently trading at £510 a share. So I'm sort of way under, you know, the actual cost of what it is to buy a share today on average, and that is where that growth comes from. You've got other details in here. which will then tell you when dividends are paid out, for example. You can see there it says quarterly, the total expense ratio, and also the dividend yield. So really nice data in there if you did want to explore this. Now, for any new viewers here, I will leave a link below in the description for this exact portfolio. If you wanted to have a look at it or even copy it, there's a link there and you're able to do so. The main reason behind this essentially is that yes, I could have gone out and bought a global, ETF that does it all in one ETF or one fund, but I wanted a bit of flexibility. Within this, if I wanted, 1 month, I saw, the UK market took a bit of a downturn, and I think this is a great opportunity to buy in cheaper. I can separate that out. When you're locked into a single global fund, you're locked into the weightings that they choose. So this not only has lower fees, a higher dividend, but it also gives me that flexibility. I've not utilised that flexibility yet. I've just been going off the weightings that are just pre-programmed in that I've chose at the start, and it's been split accordingly. But the flexibility is there. If I ever want to change these weightings, which I may do next year, I'm going to review that, at the start of the next tax year. Might change a couple of these percentages, might even add in any more ETFs. So that's the great thing. I could swap and change anything here. I could add in way more ETFs if I wanted to. Again, it's all to do with flexibility. For the average person, it might not be needed. You can kind of set and forget this fund, but I quite like investing, if you haven't noticed. So this sort of stuff is stuff I enjoy, sort of playing around with the different aspects, if you like. So that's a quick overview of my InvestEngine portfolio for this month. The only change I plan to make is to add in some additional funds at the back end of December. Now, whether I invest these straight away or leave them as cash, I'm yet to decide, but you might have noticed I'm a little bit of a way off from completing that £20,000 ISA allowance before April. Now, if we go off months, I've only got 4 months left, which with my regular payments would be £1,000 a month, which would only take me up to around £15,000. So I need to add in another £5,000 before the end of the year, which are outside of my regular payments. So back end of this month, I plan to put in £2,000 or £3,000. Might leave this in cash. The reason for doing so with that is that we might see a bit of a market correction next year. Obviously, I don't have a crystal ball, I don't know, but at the moment, the market sentiment is quite interesting to me. There's quite a few different factors, in the background, which I've been reading on. So what I may do is leave this as cash in the anticipation that the market does drop, at which point I'll then deploy those funds to essentially buy, these ETFs at a discount, which will then give me more growth in the short term when the market does rebound. Now, for any new viewers here, I do have multiple portfolios, and my plan is before January the 1st to do a full update for 2025 covering all 3 portfolios. So if you'd be interested in seeing the full portfolio with full transparency, make sure you subscribe for this video that I'll be dropping in the next couple of weeks. Don't forget to like the video and let me know in the comments how your own investing journey's been going. Thanks for watching, and I'll see you in the next one.